Ladies and gentlemen, welcome to a new episode of the Fintech Hunting Podcast. We have not one, but we have two incredible guests for you today. They are mortgage industry thought leaders, technology evangelists, automation experts. Please help me welcome to the show Andrew Penner, founder and CEO, and Nicholas Rutherford, VP of Sales at Open to the Offer. Gentlemen, welcome to the show.
Thanks for having us. Appreciate it.
Thanks, Mike. Great to be here.
It is great to have you guys on the show. Andrew, I know this is your first time. Nick, you're a repeat guest, so welcome back to the show. Just got back from Housing Wire for the gathering. There was a lot of tech talk there. I'll kind of ask you guys to kind of give your opinion as we dive into some of those things. But Andrew, it's a challenging market. Technology can be a huge differentiator. Tell me about why you started Open to the Offer and how it's impacting loan officers in a positive way.
Yeah, I spent over a decade in the mortgage industry at various levels, right? And got to see firsthand everything that works, how you scale a good mortgage organization, how you scale up a loan officer's productivity, and also some of the stuff that doesn't work. There's a lot of lead sources, a lot of technology out there that makes some promises that don't always materialize, right? And that eventually kind of drove me crazy to the point where I wanted to do something about it and get something out there that could help make a big difference in loan officers' lives. And so, created Otto to try and solve a couple big issues, but the biggest one being the retention piece. The fact that 82% of people lose clients between transactions. Only 18% of clients will repeat with the same lender. And so that just never sat right with me. If you look at any other business, those would be intolerable churn numbers, right?
Yep.
And then you kind of dissect the problem and you look at, well, why does that happen? Well, there's a huge life cycle between transactions, and what the heck are you going to say to a client between transactions? Maybe if you're servicing the loan, you have something, right? You have financially related stuff, but otherwise, what are you going to say to that customer that's not noise between transactions? And so I always loved pieces of technology that helped improve those types of communications, like HomeBot, for instance. And but there was something that could be improved there. It didn't fully take that whole life cycle of, well, how do I know when that client is back in market? So created Otto to really solve that and be able to have loan officers send high quality communication to their clients that gets opened all the time because their customers look forward to opening it. You're not trying to brute force communication with the client. And then you're meeting them where they are now. And you're giving them information about their home that makes them want to explore how they can use their equity, that makes them want to explore homes for sale around them, and you just give them the means to do that, follow them along that journey, and alert the loan officer once that client's back in market. And that's really how we got started.
Well, I love it. And I think, as you look at it, you can deliver highly then personalized communication of, and I think as you said, where the buyer is at, where the borrower is at on their journey. And that's so critical instead of just these mass emails that go out. They don't really work, or, hopefully there's not many people still sending the recipes and all this other crap that people really don't care about. It doesn't add a lot of value to the discussion. So I agree with you. It's exciting to have some new technology. Nick, I'm gonna put you on the hot seat for a second. You've been on the lender side for quite some time. You're now on the vendor side. Tell me about that transition, and more importantly, tell me why Otto.
Yeah, so I'm really excited to make the transition from the lender side to the tech side. And it's really for a lot of the reasons that Andrew had mentioned. I love buying this technology. I love setting it up. I love teaching loan officers how to use it. But I always wanted more. You wanted more features. You wanted a technology that could do X or Y. So making the change over to the vendor side, I can impact that change. The things that I was in the trenches working with loan officers on, getting their feedback. How can we make this product better? What can we add to it? How can we get more deals? I'm now in a position where Andrew and I can go build it. We both sat in those seats, as Andrew said. We vetted this technology. We ran analytics on it. We spent time with loan officers. We did everything you need to do to make these technologies successful. Now we can go out and build it. Whatever we want, we have all the tools, all the data to go out and build really impactful retention tools. And for my money, one of the most important things you can do with this technology is use it correctly. It's not about having the information. It's not about meeting a customer where they are. It's about how you use it. What do you do when Auto says your customer's back in market? Okay, it's really easy. I'm going to call them. I'm going to text them. I'm going to do whatever. Okay, what happens when they don't answer that phone call? What happens when they don't respond to that text? Are you in a position where you can build out the redundancies within your own tech stack to know, let me call Michael again because he never answered that call. Let me send him this new updated piece of information because I haven't got him back out on the hook again. Can you build that marketing? Can you build those workflows into your own system? So not only are you getting these alerts, but you're making sure that you don't miss them and you have all the data you need to run proper analytics to figure out what version 2 of using a product like this looks like.
Well, and I love that you talk about building out the workflows because I think there's a lot of lenders that are very tech, or I should say a lot of vendors who are tech savvy who put in workflow capabilities. But if you don't know how to originate that loan and all of the steps to retain that customer and that borrower and haven't been on the lender's side, they basically are just saying, here's the tool and good luck. And then as well as I do, a lot of those don't get implemented. If they get implemented, they don't get implemented very well. And then people have a lot of tech tools that aren't really delivering much for them. So I'm glad that you guys are addressing that. And because of your knowledge and expertise, you're able to deliver a solution that can really have an impact on the market. Andrew, as I mentioned, I just got back from Housing Wire, The Gathering. One of the hot topics there, probably to no surprise, is AI. And I was kind of amazed that there was a whole spectrum of where people were at in their AI journey, how much they're adopting, where they think it's going. Give me your perspective on AI and what kind of impact you think it will have on lending.
Yeah, I think AI, I can't think of a single industry that AI won't impact significantly over the next 5+ years, right? Lending is one where I think it has a particularly profound potential impact because you have a few different dimensions. You have stuff like underwriting, for instance, where, traditionally it's been mostly decision tree based, right? Something where it's, if X, then Y. And that's great. But when we look at even things like how to prevent discriminatory lending, how to further improve an assessment of people's affordability, machine learning and AI presents a lot of promise in that, right? Most recently, we've seen these large language models like, ChatGPT and stuff like that come out. And I think that as a marketing focused person, as somebody who's really been sales focused throughout my career, that's arguably the most exciting to me because now you can look at a loan officer's job, which is so much proactive communication, reactive communication, rinse and repeat. The best loan officers I know have, templates saved in their Outlook where when a customer gets to milestone X, they send this, right? Or this type of customer gets this template. And being able to use something like generative AI to empower them, make them more effective, spend their time more effectively, I think is really exciting. That's something that we're looking to implement in what we're doing and using AI to even determine things like how to appropriately reprice a loan on the fly without completely eating up all your API costs, right? There's just so many different applications for AI and mortgage. And I think even what the best of us are considering is just scratching the tip of the iceberg.
I would agree. I think probably one of the most interesting talks on the AI front was from the CEO of Rocket Mortgage. And he doesn't come from the mortgage industry, right? He comes from more of a tech background and much more consumer-facing applications, Intuit and some of the others. But he just gave an example that made total sense to me. He's like, okay, if we can use AI and not only analyze all of the calls that we've made and all of our servicing data and everything else, what we can do now is we can pick up, and they've rolled out a new tool that he was describing that when we're on the call, if somebody says they work nights, then instantly as you start picking up the marketing workflow, you know not to call them or reach out to them first thing in the morning because they're sleeping.
Yep.
Simple example, but very powerful about when we talk about personalization, it's not just, hello, Nick, hello, Andrew. that's how some people view personalization, and that's not what we're talking about. But now hyper personalization, where you're really turning into buyer behavior, when's the best time for outreach, what type of outreach. Nick, where do you see some of this stuff going?
Yeah, I think, I mean, obviously, I agree with everything that Andrew said, and AI is going to have massive implications. I mean, if I want to take it a step back, I would focus as a lender on how do you prepare for AI? Because you're talking about things that are very technological. Okay, so you need, if you're using your example, if somebody works nights, you need to have a system to build in to block that call or to set that call up at a later time. Can't just be, oh, I know that Michael works nights, so don't call him in the morning. Where is that stored? How are you going to remember that? How do you queue up the next call? So I view this all as a stepping stone. AI is only as good as how you fit it into the rest of your organization. You're doing automated underwriting. AI can take a look at that. It can give you decisions. It can move it on to the next task like that. Is your organization ready to pick up the next task? Because if you're getting something done really quick and then you hit a stopping point or you hit a lag, what good is that AI? You're speeding up to slow down the rest of the process. So I think all of this needs to be a continual build. Do you have the right tech stack in place? Are you using it correctly? Are you obtaining the correct data? Then can you apply AI to start making yourself more efficient? Because I think you need to do all of it. We weren't going to go from Blockbuster Video to watching movies on a VR headset. It needed to be Netflix. It needs to be streaming. It needs to be something else. It needs to be something else. So I think while the Rockets of the world might be ready for complete automation and AI, there's a lot of smaller lenders, brokers, IMBs that need to start upgrading. Use your current technology correctly, grow into some of these more advanced tools, and you need to start that journey now. Because you can't go from I'm the LO that has a scratch pad next to my desk to know who to call to all of a sudden analyzing and utilizing these VR tools. Let's take the steps to bridge the gap. So when the AI revolution gets here and you need to be super efficient with these tools, you're ready for that next step. You're not trying to bridge a massive chasm.
That's such a good point. And they had another lender up there. I won't mention that lender's name, but they were large. They're in the tens of billions of dollars in origination volume. So it's not just some small mom and pop shop. And their approach to AI was, well, we just hired a guy and we're starting to kind of explore it. And I think that's kind of the spectrum that we're dealing with of when we talk about AI. I think it can be a very powerful tool. But to your point, if you don't have the systems in place, if you don't know how to work, the tools, then all you did is speed something up to make it a lot faster to a dead end where you're not responding properly. Andrew, tell me about why does it help to work with a vendor like yourself? How can you guys get people up and running quicker? How can you use best practices so people can utilize tools that you have and not have to worry about, I don't have all of the technical resources. I don't know how to build it all. How can they benefit from working with a vendor like yourself?
Yeah, I think there's a couple of things. And, one thing I want to highlight from what Nick said that also pertains here is the fact that so much of AI is data driven, right? AI models are only as good, just like most things, only as good as the data that you put into them. And so a big call to arms for lenders right now would be, look, start tracking and storing all of these data points. If you're a loan officer, get off that scratch pad and put your data into the CRM because it will pay itself back in spades. It may not be today when your company is ready to modernize, leverage that data and use it, but 3 years from now, let's say, even a year from now, when you do want to, really make that big push, having that rich historical data will have so much value to the organization and make it so much easier to deploy something like that. And that's something that we do too, right? Is we're tracking so much data on both the property level and consumer activity that really helps enrich a lot of these lender systems, make them more intelligent and open doors for them to be able to use some of these models in the future. Now, another thing too is that, as a lender, you're always trying to figure out, well, what makes sense for me to build in-house? What makes sense for me to license, right? What might make sense for me to buy if I'm a bigger company? But that build versus buy decision was something we grappled with all the time at my previous company. And, we were fortunate enough to have some pretty significant in-house development resources, really talented people, really forward-thinking executive management who were willing to take chances on stuff like that. But even we, I mean, you get some pretty ambitious goals, especially at a time like right now when modernization is forcing people to rethink their business in a completely different way. So when you have, 10 initiatives you want to tackle in parallel, you can't possibly do all those internally. And how do you find the right vendor that's going to be aligned with you philosophically, who has the mission to empower you and not just kind of keep you captive, and also drive a result for your business that has a tangible ROI? And I think that's where we've really designed Otto to fit that mold, where we're solving a problem for these lenders. We're helping them keep that repeat engagement happening. We're helping them observe that client activity and get proactive notifications when that client is back in market, not just rely on the customer to raise their hand and say, hey, I want to talk to my loan officer because I'm ready for a pre-approval. Because we've seen that most people don't do that, right? That's like the broken system. What is it? Definition of insanity is doing the same thing over and over again and expecting different results, right? That's not going to happen. But if you think about the investment that would be required internally to try and do something like that, it's massive, and it's distracting from a lender's core focus of origination, because now you're forcing them to turn into a technology platform. And so Otto really tries to be that vendor that's aligned philosophically, that works alongside them, and is completely incentivized to deliver those tangible ROIs.
Excellent. Great insights there. So, Nick, put your lender hat on for a second. What are the specific pain points that Otto is addressing, and where's some of the ROI uplift?
Yeah, so I think one thing that we really want to focus on is what happens with our deliverables. So our core product right now is a home value report that we deliver once a month to clients. And what we're really focused on now is we have a lot of calls to action in that report. It's not something static. It's information borrowers like 80% open rates. How do we put calls to action in there? And then how do we use those calls to action? We're telling you you have equity in your home, right? Your home is worth this now. You've paid off this. This is how much you have. What can you do after that? Make that actionable, and then make that action deliverable to the lender. Because it's one thing to give a borrower a piece of information and allow them to click through to access it or to learn more. How do we get that back to the loan officer? How do we build it into your CRM? How do we send it to you in an email? We're very flexible with how we deliver those things based on how you're currently set up, but take more action. It's great to get open rates. It's great to get click-throughs, but all of that has to start working for you. And then we're building some new and exciting stuff that we're talking about for this summer. We have a rate product that we're in beta on right now that's going to be actual real-time pricing through your pricing engine. So no longer are you going to do the national average rate to compare for refinance opportunities. We're doing real-life, real-time scenario-based repricing for refinances, while also pulling in some of that data Andrew talked about. So when we reprice, we're going to take the new balance based on our AV, or your new value based on our AVMs. We're going to take your new loan balance based on how much you've paid off. We're going to apply those new set of terms to a pricing scenario, run it at the loan officer branch margin level, then return that deliverable back to you to know if it's time for a refinance. So like that's just an example of some of the cool things that I haven't been able to build before, but now we're in the process of building, and we just expect to keep growing on that.
Andrew, go a little bit deeper on what's next. What do you see for the next 6 months, the next year? What else are you guys going to do to continue to add value to lenders?
Yeah. So I think Nick touched on some of the big stuff, but for us, again, where we are now is, these home value reports with the associated insights, right? Trying to track all this consumer behavior, both on the Otto website, which ends up being kind of a white labeled home search portal for the lender, but then also across the internet, right? And so where we are now is there, but where we want to go is trying to get into the full cycle of both retention on the closed customer level and improving lead conversion rates. That's something where I know Nick and I both managed direct to consumer channels in our previous jobs, and man, you look at those conversion rates from lead to fund, and they are preposterously low. And the economics end up making sense at the end of the day in a lot of cases, but how do you help a lender improve that and focus on the right leads to follow up with, re-engaging leads that have gone cold? And so that's a big part of what we're doing, is by engaging, those customers that are, maybe have gone cold in the past, engaging them with things like new listing alerts. Everyone loves seeing the new houses for sale around them. That's what brought them to the table in the first place,
Yep.
and that's what's going to bring them back, right? By tracking their activity across the internet, across over 2,000 mortgage and real estate sites that we have access to, by monitoring their rates, what they came in with, what they were initially quoted, and now what they can potentially qualify for, finding those little anomalies in the market where you can almost do, lead pricing arbitrage and say, you know what, I noticed that when you inquired a month and a half ago, rates were about 0.25% higher than they are now. So based on where rates are now, you can potentially, get a cheaper mortgage payment, or you might be able to afford a bigger house. You might finally be able to tackle some of those affordability issues that kept you in a specific home buying budget and limited your options. And so now that's really what we're focused on, is fully empowering both the loan officer and the lender to really take full advantage, keep those customers, both the closed customers that they've worked so hard for in the first place, and the leads that they paid so much for.
Great insights, guys. We could continue to talk. You guys are welcome back anytime. Before we end, Nick, if people want to find out more about Otto, what's the best way that they can get a hold of you? How can they see this in action?
Yeah, so reach out via email, nick@opentotheoffer.com or andrew@opentotheoffer.com. We both do demos. We both love talking to clients. So please reach out. Even if you're not ready to buy, reach out. Let us give you a demo. We're putting a wait list together for the summertime. And I would encourage, I know you have a lot of tech vendors that listen. Reach out to us on the tech vendor side. We're working on partnerships. We're trying to do some really cool collaborations across any technology platform that some of this data and retention could work with. So I love to talk to tech partners, even if there's no possibility for a collaboration. Let's reach out. Let's have a conversation. Let's share some mailing lists or customers that could maybe use one of our products.
I love it. Reach out to Otto, find out what they're doing, take a look. There may be collaboration opportunities as a lender, maybe a great way to reduce some cost and improve efficiencies. Gentlemen, thank you so much for being guests on this episode of the Fintech Hunting Podcast.
Thank you.